Hello, everyone, and thank you for taking the time to review the real estate market analysis for Santa Clara County, California for May 2009. My name is Robert Whitelaw, and I am a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified E-Pro. I'm also the president and CEO of Whitelaw & Sons Real Estate Services based right here in Silicon Valley. Now let's go ahead and look into the ways you can get in touch with me. If you'd like to check out my website, you can head on over to www.soldbyrobert.com, and there you'll find my other podcasts, which I do every week, and also articles that I write relating to real estate. But you'll also find a player to view all of my YouTube videos relating to the market. If you'd like to get in touch with me via email, just send those off to robert@soldbyrobert.com. If you'd prefer to get in contact via telephone, just dial 408-852-0525. If you'd rather get in touch online via a chat software, if you use AOL Instant Messenger, Google Talk, or Yahoo IM, the screen name is The Rebel Broker. For Skype users, the screen name is just Rebel Broker. Now, of course, Rebel referrals are always appreciated. If you or anyone you know is interested in buying or selling real estate in the Silicon Valley area, please feel free to get in touch with me, and I will help you in any way I can. And if you're searching for real estate anywhere in the United States, I can go through the process of finding the perfect agent for you. So whether you're buying, selling, or investing, I can find just the agent to meet your needs. Now, let's go ahead and take a look at the supply and demand numbers for Santa Clara County. And things, again, are looking up this month. If we take a look at the sales numbers, things are up 13.06%. That is 114 more homes sold in the month of May of 2009 than the same month of 2008. So that's really good news. You can see how the performance has just sort of edged up a little bit from last year. You can see that what we started with in 2004 was really our peak in sales for the month of May. Now, just to remind everyone, this is just the month of May going back to 1999. So there's no seasonal changes you need to worry about. This is just the month of May for each one of the years listed. And you can see that we hit our peak back in 2004 and then had a pretty steady decline, a bit of a marked decline between 2005 and 2006, and then a steady decline up until 2008. And we've finally turned it around this year in 2009 and seen those sales numbers increase a bit. Now, if we take a look at the next chart, which is the next bar on the graph, the darker bar, that is the number of homes that were listed. And as you can see, this has also been declining over the last few years. And that's good news. The fewer homes that list means that we put fewer homes into the market. New listings is actually down 28.67%. That is 609 fewer homes listed in the month of May in 2009 than the same time last year. That leaves us with a grand total of 1,515 homes that were listed in the month of May. Now, if we take a look at the inventory numbers, and of course, this is really the telling number. Now, of course, sales are great. Upward sales is always good. But look at those inventory numbers. We've seen a dramatic decrease in inventory. And as long as I've been doing these presentations, we've talked about how what really needs to bring this market back into equilibrium is a reduction in the inventory. And we can talk about how we get to that lower inventory. We'll see later what did it, and if you've been listening to these presentations for a long time, you already know where we're going with this because we've been talking about this literally now for a couple of years. The inventory numbers are actually down 27.4%, so that's an excellent decrease from the same time last year. That's just 12 months with a 27.4% decrease. That means there are 1,680 fewer homes on the market in Santa Clara County in May of 2009 than at the same time in May of 2008. So that's fantastic for the market to bring it back into equilibrium. Now, that gives us a grand total of 4,452 homes currently on the market in Santa Clara County. That is not that we're still not to the point where that's in the quote-unquote normal range. Usually anything below 4,000 is considered by me. I mean, this is just me giving my evaluation of these numbers. But historically, my experience in Silicon Valley, once we get over 4,000 homes on the market, that's the point where people need to start worrying a little bit about what's going on with the market. Once we get below that number, it's nothing really to panic about, at least in my experience. And that goes back to having been in this business since 1989. Now, let's talk about the ratio. Now, for those of you who've listened before, you know that I like to compare the total inventory to the total number of homes sold to get a ratio that sort of gives us a little bit of insight into two perspectives. Now, the first is how many months worth of inventory do we have? Froze the inventory, and we froze the number of homes that are selling per month. How long would it take us to sell every home currently on the market? And that stands currently at 4.5. It's great news because last month it was at 5.4, so we've actually seen that ratio improving. Now, I mentioned there's two ways to look at this number. The first way is how many months of inventory do we have? The second number really focuses on the mentality for sellers. This number also basically tells you how much competition there is for a seller. So for every home that sells, there's about 4.5 homes on the market. Now, for my money, that's actually a pretty healthy number. To have about 4 homes on the market for every one that sells is pretty close to healthy, maybe a little bit further, nudged a little further down, and I'd consider it a fairly balanced market. And that's really what I think needs to happen here is for the market to simply just be balanced. Not an extreme seller's market, not an extreme buyer's market, but just sort of balanced in between where there's enough flexibility so deals can be made and nobody's really feeling a sting one way or the other. All right, now let's go ahead and take a look at supply and demand just over the past months now. This time we're going to be looking just months. This isn't so we will see seasonal influences here, and this is going back to November of 2007. And what we'll also try to do here is get an idea for some trends, maybe even do a little fortune telling and see if we can figure out where we might be going in the upcoming months. Now, as you can see, the solds data has changed a little bit. We've actually seen an increase in sold homes from April to May of increase of 8.22%. So that's good news. We sold 75 more homes in Santa Clara County in May than we did in April. The number of listings is down 10.88%. That's 185 fewer homes listed in the month of May than in April. And finally, inventory is down 9.66. That's 476 fewer homes on the market in just this month compared to last month. Now, those numbers are all heading in the right direction for good news. Now, you can see the trend graphs we've got here. You can see that the blue bar at the bottom is gradually tending up. That's great because that's sales, and we want that to continue to go up. You can see that the number of homes listed is also in the decline. It was at 1,750 in November of 2007, and it's been very slowly declining ever since on average. And inventory has also been declining. So these are all good numbers and indicate that the market is tending to move back towards the middle where we'd like it to be a little bit more of a balanced market. All right, now let's take a look at the short sales and foreclosures. We'll go ahead and take a look at what we have right now. Short sales made up 11% of the total homes sold. Foreclosures made up 40%, and conventional sales made up 49%. That's actually, pretty good news. To have half of the transactions out there being conventional is good, but let's compare it to last month and see what we got there. Now, short sales were 11% last time. 51% of the deals were foreclosures, and only 38% were conventional. So in comparison to last month, we've actually made a dramatic turn into conventional sales taking up much more of the market. In fact, it makes up almost half of the total transactions, and it accounts for the largest percentage of any one of these segments that we're covering. So instead of foreclosures now dominating the market, we're seeing conventional sales starting to dominate. We're going to see why that is in a second, but I just want you to look at this because this is a very telling chart, graph to let us know how the market's been moving. And if we could go back and see these going back month to month to month, we'd see that we've been steadily moving back where conventional sales transactions have been taking over more and more of the market. So this is good news, and it shows a decline in the influence of these short sale and foreclosure sales. It doesn't mean foreclosures and short sales have declined. It simply means that there are now more people out there buying properties conventionally, and I actually think that's a good thing. There's a lot of really great deals to be had out there, completely independent of the short sale and foreclosure situation. So this is actually really good data. All right, now let's go ahead and take a look at home prices. And again, this is going to be for the month of May, going back to 1999. And this, I think, is really the most telling chart. Now, if you've been listening for a while, you know that in my opinion, if you go back to market influences, it's a supply and demand situation. And what needed to happen in order to bring these inventory numbers down was we needed to have a dramatic drop in sales prices. And as you can see from this chart, that is exactly what has happened. Now, the average sales price currently sits at $645,774 in Santa Clara County. That is a dramatic drop. Look at 2007 where we were just topping out at $1.1 million as the average price. And that really, frankly, just isn't sustainable. There are so many folks out there that simply can't afford to buy a $1.1 million house. The average person doesn't make enough to buy a $1.1 million house. So the average price of a home should really be where, at least as close as possible, to being something purchasable by someone with the average income in the county. So we're seeing that number coming way down to a much more reasonable level. Let's talk about the high and lows here. Now, the highest priced home was at 11308 Magdalena Road in Los Altos. That home sold for $4 million, originally listed for $4,495,000, and it was on the market for 76 days. So it had to come down in price almost a $500,000 in order for it to finally get sold. But it also shows that we are seeing some activity at the higher levels of price, and that's something we've seen not just in the county in general, but we've also seen it in some of the smaller communities. So it's been sort of a universal occurrence here. Now, the lowest priced home was at 1781 Crucero Drive in San Jose. That home sold for $198,000 and it originally listed for $148,000. So it did sell for more than the asking price. And according to the records, it was only on the market for 15 days. If you do a little bit more research into this particular property, though, you discover that that's not really the case. There's really a little bit of a darker story here. It was actually listed way back in 2008, in April of 2008, so it was really on the market for more like a year. They'd been trying to sell it for an awful long time, but the sad part is it was originally listed for $385,950. So you can really see that this particular property had to come way down in price. What's interesting is the statistics that come out of this process show a home that sold for more than asking price, when in reality, if you still kept it linked to that old data from when they first tried to sell the property, it's really a much sadder story. Now, the change, this number is going to knock you out. It's such a big drop. You can see there was a pretty good drop from 2007 to 2008, but man, the drop from 2008 to 2009 was dramatic. The average home price dropped by 33.47%. That is a $324,928 drop in the average price of a home in Santa Clara County. So it's really come down, and that dramatic drop is what caused the dramatic change in sales, as far as sales increasing in general, and also the dramatic drop in inventory, as these prices are really too difficult to resist by, I think, most buyers out there who realize that first of all, markets are moving, and that if there's anything true about today's market, it's that we are at the low end of the price scale, and there's a lot of folks coming out to take advantage of that. And I know, just from the standpoint of what I have heard, obviously the folks I talk to is a much smaller percentage of the overall market out there. I'm seeing far more people now doing searches, not just for short sales and foreclosures, but are doing conventional searches for properties. So there's definitely a lot more attention being paid to the market now. Lots more buyers coming out to take a look. All right, now let's go ahead and take a look at home prices in recent months. This is also a pretty dramatic chart. There's really no question what's going on here. You can see that we really bottomed out in January and February as far as price is concerned. No question what the trend was. We saw it hit the bottom January, February, and we've been pretty steadily increasing ever since. Now, the average sales price dropped from April to May. The average price increased 8.01%. That's an increase of $47,897. So that's pretty impressive. If it had just been a single month where we saw an increase, you might be able to question it. In fact, I remember when this first started to happen earlier in the year, that's exactly what I was saying to you. Let's wait and see what happens, see if we get a couple of months to show a trend. And boy, did we ever see it. This is definitely the trend that we'd been hoping for, as far as home prices sort of flattening out. Now, I don't know what we'll see as far as how high up this will go. I think things have been artificially low with the huge drop we've seen. But I think what we're looking for is a stabilizing an average price in the next couple of months. And I actually don't think it would be healthy for the market for these average sales numbers to jump much more. But we'll see how they go in the coming months. Now let's go ahead and take a look at days on market. This is the same month in past years, and we can see that it's really just on average increased ever since 2005. In 2006, 7, 8, all increased months. In fact, between 2008 and 2009, in the month of May, we had the average days on market increase 21.13%. That's 15 more days to get a home sold than the same time last year. Now, because of the huge sample we get for the county, I don't need to adjust any of these numbers. These are very accurate reflections of what's really going on out there. Just a handful of properties that are extremely at the high end or low end aren't going to throw these numbers off too much. So a lot of the little influences that I point out for smaller communities like Los Gatos, Almaden Valley, Morgan Hill aren't really going to play a part here. So these are all numbers you can really pretty much take to the bank as good averages just because there's such a huge sample size for the data. So what does this mean to sellers? Well, clearly we are seeing a time when it's taking about 80 days to get your home sold. I think that's fairly reasonable. And the bottom line is that while it's taking longer, at least things are starting to move now. With inventory moving the way it is, with the ratio of inventory to sales sitting where it is, it's all really fairly good news. Just use this for sellers as sort of a way to calibrate yourself to understanding how you might want to schedule the sale of your property, what you might be planning for. If you're hoping you're going to sell your property in 30 days or 60 days, maybe that's not such a realistic expectation. Or if you really need to make those numbers happen, then you need to be priced a little bit more aggressively. You need to get that attention early. For buyers, this might be a good way to gauge how much time you have to try and come up with the best deal possible on a home that you're looking at. But I'll tell you, homes are starting to move a lot quicker now. The really good deals are getting snapped up pretty quickly. Now let's go ahead and take a look at the days on market in recent months. This will give us some more short-term trends, see how things have been going. Now, right now, we're actually down. The days on market has seen a pretty good decrease over the last month between April and May. It's actually down 15.69% from last month. That's 16 fewer days to get a home sold than in April. I think a lot of that has to do with just the activity that we tend to see this time of the year. We've entered the season when things really start to sell, if they're going to sell, and we're starting to actually get a summer season, which is a nice change of pace. Now, last year you can see we saw a very gradual change from January all the way to May, where things sort of bottomed out in May, and then things started to gradually go back up again. It'll be interesting to see what happens this year. We've obviously gotten a much bigger drop in days on market in May of this year than last year. We'll see how that plays out in future months. But if this proves to be a trend, we may actually get way more of a decent selling season this summer than I think I or anyone else had really anticipated for 2009. Now, I do appreciate you taking the time to listen to what I have to say on these subjects. If you'd like to get in touch with me through my website, you can find that at www.soldbyrobert.com. Now, you'll find there access to a great multiple listing service that's map-based, so you don't have to know the cities or the zip codes or any of that kind of stuff. You can just zoom in on the areas you care about and do great dynamic searches right there. You can find foreclosures, short sales, any kind of property you like right there at my website. You'll also find my weekly podcast posted at the website, and you'll also find a video viewer at the bottom of the page where you can view all of my other market analysis videos. Now, if you'd like to contact me via email, feel free to send those to robert@soldbyrobert.com. If you'd prefer to chat over the phone, just dial 408-852-0525. Or if you're someone who prefers online chatting, you can find me on AOL Instant Messenger, Google Talk, and Yahoo IM, where my screen name is The Rebel Broker. And on Skype, just use screen name Rebel Broker to get in touch. Now, of course, referrals are always appreciated. Or if you or anyone you know is interested in buying, selling, or investing in real estate in Silicon Valley, feel free to get in touch using any of the methods I have outlined above, and I'll be happy to help you in any way I can. And if you're interested in buying real estate anywhere in the United States, go ahead and get in touch, and I will be happy to connect you with the best agent for your needs in your area. Thanks again, and I'll talk to you all next time.